You're muted, Jordan.
What's up? What's up, guys? That's okay. We're doing a Friday works training call going over. Welcome on here. We're gonna be getting started in the next minute. So anyone?
Yo, this music's a whole vibe, bro.
You like this music? You like this?
It's a whole vibe, bro. I love it.
Yeah. Hell yeah. Yeah, just share this out. Anyone that's on here, it's a Friday evening. Going over some charts, entry exits. Requested.
Hi, Jaime.
To be honest, today's
Hello, man. Whoever
the first
said
day that I
hi.
didn't get a headache.
Your boy Edward.
What's up,
Yesterday
Edward?
I did get one, but it was light. I don't know if the pill helped.
You know, I almost could have sworn that I had the option. I had the meeting setting muted. Almost could have sworn. That's okay. We love hearing everyone. We love hearing everyone's voices and everyone's perspective. What is that? Cruz, welcome, man. How's it going? Daniel, David. And Jordan, what was it saying? And, you know, I was thinking about getting started with this call, but this was so hard that we could just leave him out. We just have fun. We just sing and dance. But these vibes, I mean, it's like, come on. This song right now, like, we actually in this. Yeah, dude, we're gonna go ahead and get started. We're gonna get started. How's the volume? How's the volume of it? Turn it on. I like to keep it on in the background. Is that good? Thumbs up. Too loud? Too soft? Too loud? Turn it up. Turn it down. Turn it down just a little bit. How's that? Okay. All right. All right, guys, welcome to the call. As you guys know, probably see on the screen or you saw it on the thread, we're going to be going over entries and exits tonight. At any time during this call, if anyone has anything they want to say, any questions they want to ask, or any pairs they want me or any of the other gentlemen co-hosts to actually go over, you know, at any time, you can go ahead and drop in the comments, or you can unmute yourself and ask a question or request a pair. Now, with that being said, I pretty much only trade one pair. Gold has been the pair that over the last probably 2 years now has been 80 to 90% of my trades personally has been from gold, okay? And I'll explain a little bit behind the psychology of why I only trade one pair. For those of you, and by the way, before we get started into this, could you guys drop in the comments, how long have you been trading? Drop in the comments, what has been your experience trading? Let me know how many months you've been trading. Maybe what was your best day? What are some challenges you're going through? What are things you're learning? You know, just drop any type of feedback in the chat. You know, we'd always like to get feedback and see what we can do to help. Okay. We got 10 months, 4. Not sure if that's 4. Could be 4 minutes. Could be 4 hours. I don't know. 4 weeks, 4 years, maybe. I don't know. 4 months. Fear of missing out. 5 months. 7 months. Best day was 2,680. Okay. 1 month. 7 months. Yeah. And go ahead and guys, if you could drop in the comments what specifically you're looking for as far as a training, and more specifically, since we're on the topic of entries and exits, are there any specific questions on the topic of entries and exits that you would like? Like I could go right to that question, you know, right off the bat, or I could just go, you know, going over the pair. But if anyone has any questions, you know, definitely go ahead and ask those. how to set stop loss and finding entry. Okay, perfect. Perfect. I have a good place to start. So the first thing that I'm going to do is take it from the beginning. Okay, so when it comes to entries and exits, the first step for me is identifying where I'm looking to enter. Okay, because I believe that there are a few steps in identifying a setup. For me, there are literally 3 steps for me. I don't know what Jaime does or what Hassan does, but this is what I do. There are 3 steps for identifying a trade that I'm looking to enter. Step number 1 is mark the zones. Mark the zones, not just any zones. Mark the zones that are relevant, okay? Realize this, if you have a cluttered chart, you're gonna have a cluttered mind. If you have a cluttered environment, you're gonna have a cluttered mind. So keep it simple, okay? KISS, keep it simple, stupid, right? Some people, you know, I used to do this a lot. We like to make this chart look like the prettiest thing in the world. We like to put all the indicators on there, all the Fibonacci's, all the lines, if it's not relevant to the next trade, why is it on your chart? I mean, think about it. Like, if it's not relevant to the next trade, why is it on the chart? So mark the zones that are relevant for your entry. Okay, and I'll get into this here in a second. That's step number 1. Step number 2 is set alerts. And more importantly, sit on your hands, okay? Because what a lot of people do, especially in the beginning, and it still happens to me from time to time, right? We like to stare at the chart. Does any of you guys, if you could drop a 1 in the chat, if you find that when you enter a trade, you want to either marry the trade, or you just, for some reason, can't keep checking if it's in profit or if it's in drawdown, or you just want to make sure, or let me see if I can catch an entry real quick, or, you know, maybe there's gonna be a setup. If I stare at the chart, maybe I can catch a quick scalp. Has any of you guys ever thought that before? I know I have. I know I definitely have. Okay, so the whole idea is you're developing this muscle called discipline, where you're not chasing the market, you're letting the market come to you. You know exactly what you're looking for, and you're waiting for that to appear before you go ahead and execute a trade. Okay, so step number 3 is candle confirmation. Okay, some people like to enter off of limits, which I do sometimes. Some people like to enter off. I'm not sure what other people do, because I don't really care what other people do. I know what I do, and I know it works for me. Okay, that's a good mindset to have in general. But like candle confirmation, not only is it the candle confirmation, but it's in the zone that I had pre-marked. Okay, so if you know where you're looking to enter, and you know what you're looking for when it gets there, then it's just a matter of waiting for that to happen and then executing when you see it. Okay. It's not about, do I think the market's going to go up or down? It's not about when's the next opportunity to make money. That's not what it's about. Can you clearly define rules ahead of time? You know, and one thing that I've had to learn the hard way is that trading becomes a lot easier when you make all your decisions before market opens. Okay, I think we overcomplicate trading, and it's by thinking that we have to be perfect, or thinking we have to be right all the time. We think that we have to win every trade, or if we lose a trade, we think we did something wrong. Okay, that's just the wrong mindset to have. Okay, just because you lose a trade does not mean you're wrong. It just means out of a set of whatever set of variables of trades, 10, 20, 30 trades you were going to take, that was going to be one of the ones that we're going to lose. Okay, so I'll go ahead and show you what exactly this looks like on the chart. Okay, so for me, like I said, I'm trading gold, so I'm not looking at other pairs. Not only am I only trading gold, but I'm only entering in a trading window. Okay, so notice that the training is on entries and exits. And before we even got into that, we got into what happens before that, the preparation. Okay, preparation and waiting is most of what trading is. Trading is not just entering and exiting a bunch of times. It's not, you know, seeing how many trades you can win this week, or, you know, it's nothing like that. It's just, can you set a set of variables? Could you give yourself an edge over the market by setting up rules to where you will win over a long period of time? That's the kind of the mindset you need to have. It's not about what you can do on the next trade. It's not about if the next trade wins or loses, but can you set up a set of variables? This is what I've set up for myself, and just execute it. Okay. So if I'm trading from 7 a.m. to 9 a.m., then, and I'll just break it down a little bit what I do like in the morning right before I get to trading, because that kind of plays a factor into the entries and exits. Okay. So for example, let's see, where is a good one? Right here. Okay. 7 a.m. to 9 a.m. So that means that I'm not entering before 7 a.m. And that also means I'm not entering after 9 a.m. And the reason why that is, I don't know about other pairs, but I do know on gold specifically, I've done extensive back testing over the last 2 to 3 years on gold. And I know the estimated time where a move is going to happen. And I was thinking of a way where I could consistently make money trading. I could trade, but not have to look at the charts all day. And it's like a light bulb went off in my head. You know, back when I was inconsistent. I was just looking at the markets at all times of day. I knew that wasn't the solution. So I had to think of something, and it kind of popped in my head. I was like, what if I just look in the same, what if I can identify a window in New York session where most of the moves happen on a consistent basis over a period of time? If I could only look in that window, look at the same pair every time, and look for the same exact setup every time, odds are the same patterns are going to repeat themselves over and over. And I found out that that actually is true. And there's 3 setups that I personally look for when it comes to entries. I just went over the first one, which is candle confirmation in a zone, but I didn't identify what a zone actually is. Okay, so let me get into that. So when it comes to zones, me personally, I'm looking for 2 different types of zones. Okay, and you can write this down. I'm looking for order blocks and I'm looking for liquidity. That's the two setups that I trade. That's the 2 setups that I trade personally. And there is one way there's one way how I play the liquidity. The way I play the liquidity is first I identify the liquidity. And what is liquidity for those of you that don't know what liquidity is? Liquidity is where equal lows or equal highs are, but more specifically where orders are stacked and where people's stop losses are. So wherever people are entering, the stop losses are below. Wherever the stop losses are is where the money is. The banks are looking to accumulate money before making the move in the direction that they prefer to make it go. So for me, if I was trading New York session on the 18th, the first thing that I would do is identify, am I looking for a buy or a sell? Let me mark some zones. Where am I looking to either enter or exit? Okay. And then I immediately see this candle up here on the 1 hour time frame, which on the time frame, I'm not too concerned on what time frame it is. When I'm trading in a 2 hour window in New York session, a lot of my entries are on the 15-minute or on the 5-minute on gold. And that gives you a quick 1 to 2, 1 to 3 trade, exit by the end of the morning. That's kind of how I like to do it. I don't like to hold over the weekend. I don't like to hold over the next day. I feel much better about my entries and exits when I'm in the trade, get a good entry, go break even instantly, and then just let it ride. Okay. I don't know about you guys, but when I hold it past noon, I tend to check my phone a lot. Have any of you guys ever done that where you enter a trade in New York session and it's 3 p.m. and you're still stressing yourself out because you're in an open trade? Is it in profit? Drop a 1 in the chat. Is that you? Have you guys ever done that? Have you guys ever entered a trade at 2 a.m. and you can't fall asleep because you have to make sure it goes break even? Okay. I decided that I don't want to experience that anymore. Why? Because it's not something that I can repeat consistently over a long period of time. Okay. And when it comes to trading, if it's not something you can do every day, why do it? And that's just in general in life. Like, why do something that you're only going to do temporarily? If you're going to have to fix that habit later on, why not just do it correctly from the beginning? So I started studying people that were making 7 figures and 8 figures trading. And I had found out that they enter in a trading window, they have a set of rules, and they follow those rules, knowing that they could lose a couple weeks in a row and still be in profit in the long run. They could not trade for a couple weeks and still be in profit in the long run. So I've been more or less adopting this type of mindset. I only am looking to enter in this window. Why? Because it's consistent and it's repeatable. It's what I can control. What I can control is when I push the button, how much I risk, and where I'm putting my take profit and stop loss. That's all I can control. I don't know what's going to happen. But what I do know is if I've given myself an edge where a set of variables, for example, entering on a specific candle confirmation in a specific zone, if I know that's going to happen, and I know through back testing that over, let's say, this is just a random number, 20 trades, let's say 12 of them win or 15 of them win. If I know that already, then I can just go ahead and execute on an individual basis, not being concerned if that one wins or loses. Does that make sense? Time. Yeah, I've found that. So I'm in Mountain Standard Time, by the way. And at 7:30 a.m. is when the stock market opens. So that is when actually quite a bit of volatility gets pumped into the market. And I've noticed that most of my entries in New York session, they come between 7:30 and 8:45. And I have made a rule where I don't enter at 9 or after. And the reason why is because that is when the market tends to slow down. And I've also found that if it makes a move before 9, it should hit take profit or go in profit enough to go break even by then. And if not, it's probably not going to be a real move. It's going to be just consolidating. I don't want to be in consolidation. I'm in Mountain Standard Time. So I know I haven't showed too much on the chart yet, but I'm just kind of framing this in your mind right now. I would like to be in a trade in this 2-hour window, enter and be in either break even or won or lost already by the time it's 9 a.m. That way I can go to nature and not stress about should I close this trade or not? Do I need to re-enter? Like those thoughts should never exist when you stick to this window, okay? All right. So I don't even know what happens in this, but this is just an example. Hopefully it gives an entry so I can show you this example. Okay. I think there was only 2 trades that I took this week, honestly. Or I don't even know if I took the first one. One of them I took was AU, which I didn't tell anyone, but I just took it on my own, which is what I usually do. Okay. There was one trade that we called out in the Telegram. So I want to go over that one and basically explain. So let's just pretty much say, since it didn't happen, this is a good example. Okay. Disregarding the time window and all that stuff, just focus on the chart itself, okay? Because this is what I look like when it's in my trading window. So before I mark the zones, actually, I didn't even say this. I've identified, am I looking for a buy or sell? Because if it's trending up, I'm probably looking for equal lows to be swept and then enter there. So this is just an example. And the reason why I drew the purple line here is because there's entries here, there's entries here, there's entries here, which means there's stop loss here. And if there's stop loss there, that means that's probably where money is going to get grabbed. It means probably, more than likely, price is going to dip down into that region. And when it does, I'm looking for candle confirmation. Okay, so if you guys probably just saw, it ends up going down in there. So I'm gonna tell you what I look for entry as far as candle confirmation goes. Okay, it may have given something here. Okay, this is an example. This is an example of what I look for on a candle confirmation. Is this candle right here? That is called a hammer. It's called a hammer candle. You can look up on Japanese candlestick patterns or wherever you find your candle confirmation, what candles look like. It's a reversal candle pattern, and it indicates a reversal in price. If you guys have ever seen Johnny Pham, have you ever seen any of his webinars, or if you've ever traded with him, he enters off candle confirmation. He enters off reversal candles. That's something that he's definitely showed me, and he's showed me that you can do that on any time frame. I never really thought about doing it on 1 minute. I think he does some of the 1 minute, but I enter on the 5 minute and the 15 minute. That's my 2 candle confirmation entries, 5 minute and 15 minute. The only time I'm going 1 minute is if there's some insane volatility where there's like a 50 pip 1 minute candle, which it's probably not going to happen on other pairs, but it happens on gold quite often, honestly. Okay. So I would enter there, and for example, where would I put take profit? Just for example purposes, my minimum is 1 to 2, and I prefer 1 to 3, but I will take 1 to 2. And the reason why is that it's very repeatable. When you enter off candle confirmation, it goes instant profit. So you're not too concerned about the risk reward because the accuracy is so high. So if you're entering off a reversal candle, even if you lose, it's still probably going to go 30 pips in profit before you do. So you at least have a chance to go break even. That's why I'm fine with 1 to 2. But however, I've been recently setting a take profit that lines up with risk reward and structure. So this would be an example of where it may reject somewhere in this region right here in this candle. It's probably going to reject somewhere in there, specifically either the wick or the open. I like to do the open. However, in New York session, like just think about, for example, right? If you're trading an FTMO account, or if you're trading a bigger size account, or whatever, I don't know what type of accounts you guys trade, but if you're floating, you know, maybe it's 1,000 or maybe it's 2,000. If you're floating that on 1 to 2, you know, why not just take it knowing you're going to get another setup just like this tomorrow? You know, there's no reason to be greedy and say, oh, I got to hold it. I got to hold it all the way up here. It might come up here. Have any of you guys ever done that? It went instant profit 50 to 100 pips, but you were so convinced it was going to go 200 that you ended up, you know, coming back to hit your break even. Has that ever happened to anyone? You guys, so I want to know, for those of you guys, I don't know if any of you guys actually voted on the poll, like as far as entries and exits, are those some challenges you guys have? Because I feel like as traders, we all have like the same situations. I should say, I'm not going to call them a problem, because a problem means something's wrong. I don't think there's anything wrong. It's just there's different habits and thought processes we use when it comes to trading. But is it like you enter too early? You don't know where to set the take profit. You're getting hit break even. If any of you guys have anything currently right now that you've been experiencing a lot, maybe consistently, whereas you don't even know where to enter, or you're entering early, you're entering late, or just in general, you're like, okay, I just want to see what you guys think. You know, I don't know where you guys are at with that, but whoever that is, whichever one, this is what I would have done here. This wasn't in my trading window, but this is an example. So does this make sense to everyone? Equal lows identified, swept into the equal lows, and then gave a hammer candle in that zone, entering off that. And it looks like it literally rejected that order block to the T, to the wick. So that would have been cool. And if I was looking to sell this, which I wasn't, you know, you could have also put a sell here too, but I don't usually do that. But as you can see, you definitely could have. Okay. So that's example number 1, which is a sweep of liquidity and then a candle confirmation. That's one of my setups. Another one I use is a limit. So I will show you how I use limits, buy limits or sell limits, which is actually the trade that I put in my Telegram the other day. I think it was yesterday or 2 days ago. I don't remember. Okay. All right, perfect. And actually, this is another example of a trade you could have taken as well. Okay, so this being liquidity, and for those of you guys that trade New York session, do any of you guys trade New York session? Because I've found, especially on gold, probably in other pairs, but anytime it is real break of structure. Okay, you haven't identified real break of structure. Do you mean like? Could you elaborate on that? Do you mean as far as looking for a sweep of liquidity, or do you mean once you've entered, or I'm not sure exactly. I think there's different contexts where to use break of structure. But even for example here, New York session, even though this one looks like it was pre-New York session, anytime you see a large, sometimes when it sweeps liquidity, it can look like a break of structure. Oh, okay. Yeah, usually it's based off of a candle close below. But however, I don't know if it really matters. I mean, it doesn't matter for me. It doesn't matter for me, if that makes sense. Because if I see the rejection, I'm going to enter. But keep this in mind as well. Like, of course, we see this in hindsight, but anytime you see, let's just say, for example, we're in New York session right now. This is just an example. This a scenario in your head. You see gold tanking. Okay, did not mean to go that fast. But you see gold tanking. What you should be looking for is, okay, where are the lows? Where equal lows? Where's an order block? Where could I potentially look to enter? It's not, oh, it's tanking, it's got to go up. It's like, okay, where is this probably going to go? Where's this probably going to go? So even like 30 minutes ahead of time, you already know exactly where you're waiting for it to go. So there's no rush. There shouldn't be entering early. There shouldn't be missing it, because if you set an alert, it's going to go off. The only way you're missing it is if you fall asleep, or, I mean, shoot, I'm not going to lie. Last year, my trading view had many times where the alert did not go off, and that just making me mad. I don't know if that ever happened to you guys. It definitely happened to me. But yeah, I mean, right there, it just swept just barely. You don't need to sweep it by much. But literally the same type of setup that I just said right there. See, it swept into those stop losses, and then I enter right off this candle here. Juicy, tweezer, hammer, bullish engulfing, whatever you want to call it. Good, really good risk reward. Entering off the 5 minute. Ideally, you're taking profit above the previous high. That's ideal. But as far as exits go, okay. Since it is entries and exits, I just went over entries. So for exits, like I said, it's either an order block or a liquidity. Same thing as entries, honestly, for me. And I know Jaime and Hassan both go a little bit more into imbalances, which I personally don't even really use, but I'm starting to learn since I've been watching them. But when it comes to, I'm literally just using liquidity and order blocks and price action within that. And I found it simple, it's repeatable. And this is what I've also found when it comes to my personal experience of trading. If you find something that works, just stick with it. It doesn't have to be complicated. Okay. I don't care if you're trading break and retest. I don't care if you're trading teacups. If it's working for you, stick with it. Just because someone else has a chart that looks a different way than yours does not mean you have to learn that strategy. Doesn't mean you have to figure that out. You don't make more money in trading by figuring more of it out. It's by figuring yourself out. It's by learning how you react in situations. It's about learning how you handle your emotions. And you will definitely, this is what I've learned with trading. Like, however you're dealing with money in that period of time, it's going to reflect in your trading account, because trading, you are directly dealing with money. Are you impatient with it? Are you patient with it? Do you believe you're worthy of it? Or do you believe that you're lacking it? And these are very important because they're emotions and they're vibrations. So before you even deposit into a live account, like, be real with yourself. Like, are you ready to actually go into a live account? Like, should you be on demo? There's nothing wrong. There is no shame in using a demo account. Like, I still use a demo account. Like, if you have to use a demo account for your first year of trading, that's fine. Some people need to learn by losing real money. That's how it was for me. But not everyone has the patience. I've seen too many people begin trading. For those of you watching this on this live and watching the recording, I've seen too many people come into trading with quick expectations because of what they see on Instagram or what they see on YouTube. They see these things, but highlights are not real life. Realize that. Remember that. The highlights you see on social media is not the reality. It's the reality that is shown apparent to you. Okay. So the best way to learn is through your own experience. You're going to learn things from webinars. You're going to learn things from videos and all that stuff. But experience is your greatest teacher. Back testing and trading is probably your second greatest teacher. And back testing is something that I have found to be very powerful. Very powerful. Honestly, without the back testing tool on TradingView, I think I'd be lost. I'd be absolutely lost in what to do. Because it can take, if you guys are trying to set up a trading plan right now and you're going through only your live trades, you may only take 1 or 2 trades in the week. But if you go with the back testing tool, you can take 30 trades in 2 hours. You can get your stats and your numbers real quick. Okay, so real quick, I'm gonna go over one more thing. I'm gonna keep it short because I know we have some other speakers and traders on here. So that's an example of what I would enter right there. Hopefully this is making sense. Hopefully this is clicking with you. Because I know there's entries and exits, but I think proper perspective is important as well. Okay, let me just erase this. The last one is a limit order is what I do. This is a limit order. So the candle that took out these lows is specifically the candle that I'm looking for. This one right here. Everyone can see that candle, I'm sure. Can everyone identify? This is the candle that took out these lows. Step number one. Step number two, is this an uptrend? Yes, it is. It is an uptrend. Also, if you want to use another confirmation, did this short-term high get broken? Yes. That's a full break of structure. So if it broke that structure, if it comes back, it's probably going to be a continuation, more than likely. 15-minute right there, which is where I entered. It also honestly went down to the 5-minute too, which I didn't even really consider that. But that's what ended up happening. And whoever asked about the stop losses, okay? Whoever asked about the stop losses, this is what I do. If I'm entering off a limit, I put the stop loss a little bit below the low. Now, I have found many times when it comes to limits that I've seen too many times where it either hit my stop loss by the spread or it wicked out this previous order by 1 pip or 2 pips. I've seen it happen probably 6 or 7 times in the last month. So I've recently made a little bit of shift of where I put my stop loss. I put them a little bit deeper than I used to. Nothing wrong with that as long as the risk reward's so good. And then once again, exit, take profit is where is structure and where is good enough risk reward that's good for me. And another element to the exit is this a swing trade or is this an intraday trade? Like really think about that. Am I looking to hold this for a week, a couple of days? Am I looking to hold this for a couple hours? That's something you could keep in mind. If you're on a long-term high time frame basis, which I mean, I'm gonna let the other speakers get on here and if I had more time, I'd get into it. But if you're entering off a daily zone or a weekly zone or even a 4-hour zone, you know, you can probably expect it to continue for a couple days. So you could probably expect it to continue past the first day, meaning you're gonna hold it. But if you're entering on a 15-minute, 30-minute, hour time frame, you're gonna want to take the intraday profit. Okay, why? Because let's just say, for example, right? Let's say you bought this candle right here, but you just kept holding it. Instead of taking profit here, you kept holding it. What happens is, this is what banks love to do. That was your entry. It comes right back down. Hold on. This is why you take profit when profit is made available, take profit. When an order block is made on your entry, you want to especially take profit, or at least a partial profit. I don't know how long it's gonna take, but it's gonna come down in here. It's gonna come down in here. All right, here we go. Right, grabs it to the T. Market's closed right there. If you're on FTMO, then you're going to want to close it over the weekend. If you're on another broker, you can probably hold it. If I'm guessing what's going to happen, I would almost expect it to break this high for sure. 200 more pips. I would think this is going to continue up even more. However, I'm looking for swing stalls in the opposite direction at some point in time next week. Playing off this candle. So that is what I'm seeing on gold right now. I'm seeing that candle on the daily, and then I'm seeing up here, up top, this 4-hour. I'm not sure how far it's going to go up. I don't care. I'm not trying to guess. I'm not trying to predict. Remember at the very beginning, all I'm doing is marking the zones that I think it might reject, and I'm waiting for it to get to those zones. I don't care what happens. It doesn't matter if I win or lose. It doesn't matter. It doesn't even matter if I hit the trade or not. I would rather have a mental win and not enter rather than try to force myself to be in the move. Does that make sense? I think too many people, they're so antsy to catch the next move so that they can see blue on their screen. But for those of you that are working, maybe a job for a paycheck, like you're not antsy on, the checks coming in once a week or once every 2 weeks. I think Renee's the one that said that analogy. Like, honestly, like it makes sense. Like you really only need 1 or 2 trades a week. Appreciate the graffiti on the screen, making it look nice and colorful. All right, that's it for me. I'll go ahead and pass it over to Jaime. I appreciate you for hopping on here. It's always It's always a pleasure, seeing your perspectives. I'm going to stop my share. I'm going to allow you to share.
Oh, there it goes. I was about to text you that. Couldn't mute myself. But yeah, thank you so much, Jordan, for dropping that sauce, man, and like just really giving everyone their perspective. You know what I mean, on these markets. And like I said, I always tell you, I'm always grateful to do calls with you, man, because like you were actually one of the first people that I've saw whenever it won't let me share my screen. Yeah, you're actually one of the first persons actually that I was actually watching on Zoom calls, teaching us exactly what you knew. You know what I mean? And you were also the first person that made me my first big bags. You know what I mean? So, and for that, I'm truly grateful for you. You know what I mean? And then just being able to see like just being able to see the growth within myself as well. Let me know if the music is too loud. By the way, let me put up the chat real quick so you guys see you guys. Let me know if the music is too loud. If it's too loud, I'll just turn it down. And if it's not, then I'll just slowly leave it like have it real low. That way, I don't like having it real. I don't like having it too quiet in the whenever we're doing these calls, right? But like I said, Jordan said something very very specific. I don't know if you guys got that or not, but it was about it was really talking more. He was saying, don't be so anxious to make profits. You know what I mean? Don't be so anxious to get in the trade, right? Because that's one thing that I had to learn in my trading experience. And I've been doing this for 2 years already, right? And the results that I've been able to see with it are amazing. I know they're only going to get better. But one thing that helped me understand this journey was not have my mindset on the profits. In other words, like I don't focus so much on the profits, but focus on the risk, right? And I know that sounds crazy, but any good trader will tell you, any professional trader will tell you that if you want to be a good professional trader, you need to focus more on the risk than the profits, right? Because the profits, you're gonna make as much profits as you want, but one thing you always want to focus on is your risk, right? You want to be able to accept your risk on any given trade that you take. That's the first thing you want to do. Accept your risk. Don't even focus on your TPs, but focus on accepting your however much you're gonna risk. Because once you're able to accept how much you're gonna risk, then you're able to take that trade with confidence, with no emotions, with no fear, because you already accepted that risk. In other words, what I'm saying is, if you're willing to risk $20 on a trade, you need to accept that and embrace that. That, you know what, worst case scenario, I lose $20. You know what I mean? Who cares, right? Because once you're able to accept the risk, then whatever profits you make just are gonna come to you. You know what I mean? Because you already accepted the loss before it even happened. You know what I mean? And that's one thing that helped me understand this trading journey, right? And also it goes back to the way you view the markets. Now I'm not sure how you guys trade these markets. I'm not sure who you guys watch or how you guys are learning, but the way I look at these markets is through smart money concepts, right? And the way I explain this to people is that this is not a strategy that we teach people. This is a concept. It's a way of thinking, right? You have to understand what the the smart money is doing, right? In other words, you have to understand what the people who have all the money in these markets are doing, right? And once you understand that, then you're able to understand the flow of the market and getting with them. Since Jordan went over gold, I'm actually gonna go over oil. You know what I mean? I know probably a lot of you guys probably trade forex, and just understand that this concept also works in forex pairs as well. But uh, I just want to show you guys real quick on oil how to look for entries, how to look for stop loss placements, and where to really set your TPs at, right? Uh, so before we even get started, right, I'm actually gonna add my tools on here real quick, right? I want you guys to just write this down. If you guys don't have this as confirmation checklist, this is something that helped me out. These are my confirmations, right? This is what I look for, right? And there might be nothing compared to what you think a confirmation checklist might look like, but these are my confirmations right here, right? This is it. This is all I need. I don't like. There's nothing on here that says breaker structure or like whatever. It's just three questions that I ask myself: is where is price at now? Where is price coming from? And where is it likely to go? Right? Those are the three questions that I ask myself. Why? Because I need to understand where price is at that current moment. Okay. And then the second question I ask myself, where did price come from? Price has to come from somewhere, which is why it's either going for a sell, going for a buy, because it's reacting up somewhere. And then the third question is, where is it likely to go? Like, where is this market likely to go? Is it likely to take out liquidity? Is it likely to go to an imbalance? Is it likely to go into an order block? Right? That's what you want to ask yourself. And when it comes to any market, right? Now, this might work for you. This might not work for you. But the key here is not for you to like really just take everything that we say as the truth, but take what makes sense to you and apply it to your own strategy, right? We don't want you guys to be exactly like us. We want you guys to have your own way of trading, that way that makes sense to you. All we're doing is just tweaking it up a little bit and adding things that make sense, and things that don't make sense, just toss it out, right? So if we look at oil, right, it says where is price at right now, right? The first thing you want to ask yourself is, where is price at right now? Where it's clearly, it's right here right now, right? But I want to really just go over this right here, this whole setup right here. That way you guys could understand exactly what I'm coming from, right? So whenever this market, right, where price at right now, whenever this market came into this area right here, all right, let me take this off. Whenever it came inside this area right here, you see these two black lines right there that I have as like, it looks like support and resistance areas, but it's not, right? There's a reason why I have these two black lines right here, right? If we go to a higher time frame on oil, real quick, that crazy ass wick. So I like, drop some ones if you guys saw that big old crash whenever that happened on oil, right? But so look, right? In order for you guys to get low risk and high reward setups, they got to come from higher time frames. And I think that I talked about this last call we did, right? Higher time frame analysis is going to give you low risk and big reward setups, right? So the first thing I like to look for is points of interest, right? This right here is a volume imbalance, okay? Excuse me. This right here is called a volume imbalance, right? Now, the importance of this imbalance is the fact that you didn't get no volume in here of no sells, no buys, right? You just had wicks. See that? You see the wicks, right? You had no candle here. That's a volume imbalance. In other words, it's missing volume. This right here typically ends up becoming a really good area for rejection on any market, right? For this instance, it's a sell volume imbalance, right? So what we want to see is, we want to see price come back on the opposite end, right, and react and trade lower, right? We want to see this as a resistance area. Okay, so whenever we scroll over here, right, to the left, right, look at price, how it hit this area, and look how it started reacting off of it, right? Yes, it went through it, but look at the bodies of the candles, how they're staying inside of it right here. All these candles right here are staying inside of it. It's respecting this volume imbalance. So now that means that this whole area right here, right? This whole area right here is a possible resistance area for me. In other words, I'm looking for possible sells in here, right? But I'm not gonna just enter on the daily time frame, right? I'm gonna drop it down to a smaller time frame and look for even more clearer signs of weakness, in other words, right? So drop into the 1 hour, right? Let's look at it right now, okay? So now on the 1 hour, you can see how this price action literally just stayed in here. It did shoot up a little bit, right? But it came back down. Notice how the market didn't really go nowhere, but stayed inside this volume imbalance, right? Yes, it did go up a little bit, right? But look what it created above here, right? This is how you look at the institutional order flow, right? This is how you want to see the market show you signs of weakness. If it's showing you signs of weakness, you want to see the market not have a willingness to make any higher highs. In other words, it's going to continue making lower highs or lower lows, right? So if you look at this right here, right, you can see how you had this last up candle, right, which is your what? Your bullish. I mean, your bearish. I know it's bullish, but it's a bearish order block, right? Why is it a bearish order block? Because you're looking for possible sells right there, right? So with this move right here, this right here is already a good example of putting stop loss placements and understanding your areas of entries, right? So right right here you had your last up candle for the big drop, right? And this whole area right here, this whole candle is going to act like a resistance for later on down the line. Now, we don't know how far the market is going to take to get back to that candle, but we know that when it gets back into that candle, you're going to see some kind of rejection, right? And so you can see here how you had this last up candle for the big drop. Price came right back up, right? Traded back into this candle. Now, if you understand on this concept, then your stop loss will look like this, and your entries will be at the open of that candle. Stop loss placement will be at the high, just right there, right? You don't need to put your stop loss any higher than this candle because you're only playing this candle, right? You don't have to put it the next nearest high. You just got to put it above this candle. If it's a big wick on this candle, then you put it on top of the wick. So for this one, right, you could have easily put it above this high, which is giving you that's a 20 point stop loss for oil. That's amazing. You know what I mean? Like if you're risking like if you're trading oil, a 20 point stop loss is beautiful. You know what I mean? And so right, whenever you get your entry, whenever you find your entries and then you find your exit points, right? I always like to show people this. Actually, no, I just show it right here, right? So you want to really just place your stop loss above this candle right here because we're only playing this candle right here. So your stop automatically goes above these highs right here. And then you just extend this whole zone out. And now you have the market trade back into this, right? You have this whole candle right here is going to act like a resistance area, right? Because it's the last up candle before the big drop, right? Now, also what you want to focus on is where's your exit point, right? Well, your exit points are going to be if you're selling, right? If you're selling the market down, you're going to be targeting equal lows or any type of lows. If you're buying the market up, you're going to be targeting highs, okay? Since we're selling the market down, we're going to be targeting lows right here, lows right there, these lows right here, and also this low right here, right? So TP1 could be right here. TP2 could be below this wick right here because that's a low. People are trying to buy right there and putting your stop losses down here. People are trying to buy right here on this wick to go higher. Stop losses are down here. And then you also have this low right here as well, where people have chosen this area to put their stop losses below down here to go higher, right? And you can see how when you're selling it, the market is going to take out those lows, right? It's not always going to go all the way to like the lowest lows, right? That's why you have to play it by as each low gets taken out, you're just watching it, see until it finally reacts, right? Now look at this, right? What do you guys drop a two in the chat if you guys know about fractals? If you guys know about fractals, drop a two in the chat if you guys know about fractals, right? And if not, just a quick explanation. I want to know who knows about fractals because like this is important to understand that as well. All right, if you don't know about fractals, right? If you don't know about fractals, fractals is just like shapes within shapes, right? It's just shape within shapes. It's seeing like everything that happens on a bigger time frame on the smaller time frame as well, right? And so whenever we looked at oil on the daily, right, we had that volume imbalance, right? Exactly, everything is fractal, Amanda, right? We had the volume imbalance on the daily time frame, right, which is why we had those two lines. Now look at this right here, family, right? What is this right here whenever I zoom into this? Hold on, hold on real quick. Right. Whenever I zoom into this area right here, right, is this not also an volume imbalance that we had on the daily? Right, it's the same thing here. Right, so what do you think we're gonna do? We're gonna mark up the same volume imbalance, just like how we marked it up on the daily. Well, guess what? We're marking it up on the 1 hour now. And what do you think it's gonna happen here? Right, is the fact that we're gonna get some kind of reaction like we had on the daily as well, right? Because this whole gap right here, you have to imagine this being just a candle right here. That's all what this is, right? Even though some brokers don't show it, maybe some brokers do show it, but all this right here is just one solid up candle. So this right here will be your last up candle before the down move. Just like this right here was your last up candle before the down move, right? And then what happens, right? Let's extend that out, right? You see that? Look how price comes right back. What does it do? It comes right back into this area again, right? Just like that. Stop loss could be, again, another 20 pips above those highs, right? You could put it right there. And guess what you're going to do? The same thing that just happened right here on this drop, right? On this drop, how you're targeting these lows. Guess what you're going to target over here? You're also going to target, let me rewind this so you guys can't see what's happening next, right? You're also going to be targeting like lows right here, right? See how you have lows right here? Lows right here, right? And then you have all these lows right here. You see how I marked up all these lows right here, right? Because if we're selling, then the market should take out that low, continue going lower to take out that low, continue going lower to take out that low, and then this low, right? If it's bearish, it's going to take out all this liquidity, right? Now, we don't know how far the market's going to go. So like I said, you have to play it by each low. See what happens when it takes out that low. If it continues going lower, you move on to the next one. If it continues going lower, you move on to the next one, right? And so, right, let's see what happens, right? If we just let it play out real quick. Remember, your stop loss is going above these highs right here because you don't have to put it any higher than that. And so whenever you let the market do its thing, right, does it ever come back to your entry? No, right? Does it take all those lows right there? Yes, it does, right? So your entries, if you're selling, your entries are gonna, if you're selling the market, your entries by default have to be below some kind of lows by default, right? If you're buying the market up, your exits, I mean if you're selling the market, your exits are gonna be anywhere, any lows, right? And if you're buying up, your exits are gonna be any highs that you see in the market, right? And then of course, if you're playing off institutional candles or off imbalances, your stop loss is gonna go either above these highs right here or this recent high right here. That's it. It shouldn't go no higher than that, right? Now, what I want to show you guys as well, right, is being able to see this happening on smaller time frames. Because when it goes to whenever on the smaller time frames, you're gonna be able to get even more precise entries on it, right? So what I'm gonna do now is I want to show you guys real quick how. Right, let me go ahead and rewind this right here before we got that drop. Hold on. I don't know if my. All right, so I'm gonna drop it down to a 15-minute because what I'm gonna do now is I'm gonna zoom in into all this consolidation right here, right? You said we have this consolidation right here. Now, whenever this happens here, you want to be like looking at the market right here and show, and it wants to, you want to be able to see what the market wants to do. If it wants to show you signs of going lower, going higher, right? So whenever we zoom into this price action, right, I'm gonna go to a 15-minute now. Okay. Right. I want you guys to see what's happening here. Right. Actually, let me do it on a 5-minute. It's actually better on the 5-minute. Right. Look at this price action right here on the 5-minute. All right. Notice how, right? I want you guys to just really look at this, right? I want you guys to really just observe, just look at this map. I mean, look at this chart right now, and then look how everything that's gonna go bullish is getting respected, and look how everything's gonna go bearish is getting respected as well. All my blue boxes are signs of bullishness where you want to be looking for buy. All my red boxes are areas where you want to look sells, right? Notice how we had this low right here, and then we also had this high right here, right? Notice how before the market gave us this run on liquidity right here, look how we had these equal highs right here, right? Let me delete all this right here so you guys can see it. So I could show you guys one by like step by step, right? Notice how whenever the market was right here, right, you had You had this low right here that was liquidity, and then you had this high right here that was liquidity, right? Now, whenever the market's like this, it's good to do it like this because you want to put the market in a range, right? You want to put it in a range. Once you put it in a range, all you're doing is waiting for it to take out like any kind of highs to then trade lower, any kind of lows to then trade higher, right? And so what happens next, right? The market goes higher, comes up here and takes out what? Takes out that liquidity right there. So this right here is a liquidity run, right? That could either be an exit or an entry for you. But this right here is called a liquidity run because it just took out highs up here, right? Because people that are right there were trying to sell the market down right here. They were trying to sell it right there, right? And of course, the market came through and took them out, right? And so now, what you want to see now is you want to see a fast reaction, right? Because it just took liquidity, right? And then so the market would then react off of it really quick, trade lower. But now, what you always want to focus on as well is possible areas where market could then trade higher or trade lower, right? So you have this low right here marked up. You have this low right there, and then you also have an imbalance candle right here. If you guys aren't familiar with imbalances, this is what it looks like, right? All it is just it's just you have this high right here of this candle and the low of this candle, right? This creates your imbalance. Now these areas here typically act like support areas because it's an imbalance candle. And the market then what does it do next, right? Trades back into that, takes out that low right here on a fractal level. See that low right there? Same thing that happened over here, right? It happened right here now. And then what happens, right? You get a reaction off of it, right? Once you get that reaction, your next target is going to be what? Now you have this last up candle for the down move because this looks just like the one on the 1 hour, and we're on the 5 minute right now. So look how everything just plays out on the smaller time frame. That's why every time frame is the same. You know what I mean? That's why it's better to look everything on a higher time frame. So whenever you go to a smaller time frame, you want to be looking for what the higher time frame is telling you. Now remember, we're inside of a volume imbalance right here. These two black lines right here, we're inside of a whole volume imbalance. So we're expecting some sells. So we want to see the last up candles before the down moves get respected more than the last down candles for the up move, right? So in other words, this candle right here should get respected, right? Price touches it, trades lower, right? And then what happens next, right? You have another last up candle right here. Nice little smaller one. You extend that out as well because you want to see price respect these candles to go lower, right? It sure does it respect it? Yes, it does, right? So in other words, you want to see the structure remain intact. In other words, this market is not giving you signs to go higher. You had this high, it never came and took out this high. Then you had this high, it never came and took it out. It respected it. So now we have a bearish market, right? Because it's not breaking these last up candles, right? It's not breaking them. These candles are acting like support resistance areas, and the market is not breaking them, right? So now vice versa, right? If it's bearish, then that means that any bullish candle like this right here, right? These bullish candles, they have to get disrespected. In other words, you shouldn't see them get played out at all, right? You might get a reaction off of them, but it shouldn't get respected. Because you remember, if we're bearish, these candles right here that are bullish will get violated through, right? All these right here, right? This is gonna let you know if you're bullish or bearish in the institutional order flow, right? So look how that candle gets respected. You look at the little reaction off of it, right? So you still get some kind of reaction, but not enough to hold price, right? Trades lower. Notice how this market still has failed to break that high, these highs right here, right? And now you have all this bullishness here. We want to see if it wants to respect those. If not, then this market's still bearish, right? Does it respect that bullish area? No, it doesn't. See that? So this right here is your sign that okay, my last up candles are getting disrespected, which means that this market is bearish, right? And that makes sense because we're inside of a daily volume imbalance, right? In other words, everything in here, right? Everything in here, we want to see some kind of bearishness to go lower because we're inside of a volume imbalance, right? And then you can see how the markets literally respect all your last up candles here for the down moves, right? So playing these right here would set you up real nice, right? To where you all you had to do is just have a short position here. Stop loss could go above those highs right here. Put your stop loss there. You could exit. You could take that low out, take this low, and also take out the low over here, right? And then vice versa. You move the market down right here. Remember, we're playing this last up candle, so our stop loss shouldn't go any higher than this. So put your stop loss right above the open. It's about a 6 pip stop loss, so you give yourself like 10 pips because of the spread, whatever, you know what I mean? And then the market, what does it do, right? It takes a while to give you that drop, but regardless, you still get it, right? Because the market never broke that high, and then finally the market then comes up and gives you 42 points, right? So right here you would have risked just 10 points, right? And that's because you gave yourself 10 points, right? And then what are you going to target whenever it goes lower, right? When it goes lower, well, guess what? You have all these lows over here, because if we're selling it, we're going to be targeting these lows down here, right? That low, this low, right? And so does the market take out those lows, right? See how it's starts taking out liquidity, taking it. Look how the reaction off of it whenever it takes it out, the reaction off of it, and look how it just takes it all out, right? So this market would have you had a low here, you also had multiple lows down here. Okay, so this right here would have set you up with a nice to 1 to 14 trade where you only risk about you didn't even have to risk those 10 pips. You could have done like at least 7 pips. You know what I mean? You could have done like 7 pips right there, and the drop would have been significant to give you a nice almost 141 points, right? So think about that, right? You're risking 7 pips to get 141 points because you're dropping down on smaller time frames. But remember, everything was all set up from the higher time frame first. The higher time frame tells you everything. The higher time frame tells you where the market's gonna go. And what all you gotta do after that, just go smaller time frame and look for the same thing. Remember, it's all fractal, right? And you can see how this market just literally comes all the way down, and then um, your entries would have been like if you want to get, let's say you missed this move, well, the market's always going to retrace back into imbalances like this, right? And so whenever you let the market come back up, what does it do? It hits that imbalance and then closes out for the week, right? And what do you think this market is going to go to now next, right? Right here to this low, and let's look more to the left, possibly all these lows down here as well, right? Because that's where all the liquidity is at. And then we also have a big giant imbalance down here on the higher time frame. So this market from here was one of my entries here. I didn't execute on this trade, but I was just marking it up this whole week, just watching oil. 20 pips again. You have your low right here. That's 123 pips. And then you also have the higher time frame target, which is down here. Now, we don't know how long it's going to take to get down there, but it's a good area to target. Because on a 1 hour, see that? It's an imbalance, and that needs to get filled in. So however long it takes for the market to come down there, that's exactly how long it's going to take for it to come down, right? And also, I think this sell-off right here was because of Biden. Now I'm not sure. Like I said, the news just an excuse for them to move the market, right? So this sell-off right here was the reason why it sold off, and I think it keeps selling off just because he just signed that thing for he cut. I think he stopped that production on that oil pipeline, whatever, you know what I mean. And so that's gonna really affect the oil companies big time. So that's why I'm seeing bearishness on oil, and which is why it's been really bearish so far, right? Would you consider the distribution within the volume? Yes. Yeah, exactly, Arthur. That's exactly what that is right there. That little move right there. I didn't want to really go too much in detail with that, but that's exactly what that is. It's just watching the distribution schematic right here, how it's playing off real nicely, right? Because you had right? You had distribution, redistribution, right? And then the sell off completely. And then you had reaccumulation, and then a nice little possible a nice little possible distribution again on a smaller time frame. But this right here is exactly where whenever the market does this, this is where you want to start looking at the markets for price action. You know what I mean? That's where it moves really nicely. And that's on oil. So I'm showing you guys that these concepts work on any market, right? We always do forex, but I want to show you guys that it also works on different concepts. I have one more that I want to show you guys for when it comes to higher time frame analysis, right? I want you guys to look at this right here, right? Look where USD CAD hit, right? I see this right here. What does that say? Monthly bullish institutional candle, right? Look at that, right? This is how you get this is how you get low risk, high reward setups. Whenever you have higher time frame objectives, whenever you have higher time frame targets, when you have those like aligned with smaller time frames, you're gonna get some nasty moves, right? So USD CAD, it came into our monthly bullish institutional candle, kissed the rat the open, ran higher, right? So let's go to the monthly, show you guys exactly what that is, right? Look at the monthly candle, right? You had your wick, the open, and then you can do a 50%, right? This is your institutional candle right here on the monthly time frame, right there, right? We want to see bullishness in that candle. We don't know how or when, but whenever it trades into that, we want to see it give us signs to go higher. And of course, whenever you go to a smaller time frame, to the 1 hour, you can see how it poked right at the wick of that candle. And what happened, right? Reaction to the upside, right? That's not coincidence that just happens right there. Remember, it's a higher time frame and target. So that right there itself was 144 pip move just in one day from the 21st, actually. Yeah, just in one day to now, right? And of course, when you're buying up, what are you targeting? Targeting these highs right here. See that? Targeting these highs. What do you think is gonna happen whenever it continues going higher? It's gonna go to this high, right? After that, what do you think it's gonna do? It's gonna keep going higher. See that? So, right? So understanding that higher time frame analysis plays a big part in your trading. Understanding that time also plays a big part of your analysis too, because if you're not in the right session, then you're probably gonna get clapped, right? So you can see here how, for me, this happened during New York session. This happened at 8 o'clock Eastern time, which is 7 p.m. Central time for me, right? So look how nothing really happened for New York, but then this pair moves during New York session. Look how when it on New York, look what happened during New York. It came back in there and took higher and went higher. Look what happened for this New York session right here. Gave another reentry here off an imbalance to go higher, right? And so this right here is important. The importance of time and price. My red area is Asian session. The blue is London. My green is New York, right? Now, the reason why I have them like that is because it's to show you when to be trading, when not to be trading, right? Look how nothing really happens during Asian session. Look how nothing really happens during Asian session. Look at the Asian session, right? So if you're trading anywhere, if you're trading like at 5 o'clock in the afternoon, 4 o'clock in the afternoon, 3 o'clock in the afternoon, 1 o'clock in the afternoon, if you're training at 12 o'clock in the afternoon, even if you're training at 11 o'clock in the morning, you're kind of, really 11 is okay, but anything after 11 Eastern time, you're low key just you're trading in just bad waters. You're gonna set yourself up for emotional roller coasters, right? Because nothing happens after New York session. Like literally nothing will happen. Yes, you could catch some decent moves, maybe like 20, 15 pip moves, but your big moves that you want, like the big impulse moves to the moon or to hell, right? It's gonna be during the London or New York session, which is why time is so important. If you're not in time, if you're not with time, if time is not on your side, but you have price, then it's not a good setup, right? But whenever you have price and time on your side, that's all stars aligned right there. You know what I mean? And then you're set to just execute with confidence. And also the day of the week plays a good part as well, right? But that's gonna be for me right there, family. I'm gonna go ahead and I'm gonna go ahead and let my boy Hassan hop on here as well to drop some sauce for you guys too. I don't really want to I just really want to show you guys some oil just to show you guys the institutional order flow. We don't mean of when to expect bearishness or when to expect bullishness. I guess the biggest thing I want you guys to know from here to get from here is higher time frame analysis. Higher time frame analysis is gonna give you the sauce for smaller time frame analysis. You know what I mean? Because now you actually have levels to target whenever it does get there. You know what to do. Um, Let me see real quick. Are you able to unmute yourself, bro? I think you're able to unmute yourself now. So yeah,
Yo, what's up,
awesome,
guys?
awesome. Go ahead and drop some sauce for the fan, bro. Appreciate you for hopping on as well, man.
Hell yeah. Yo, guys, drop some 777s in the chat. Jaime just went in. Also, some 111s for Infinite Abundance. Jordan, thank you so much, guys. Guys, really take in what they're, showing and everything. So I'm going to share my screen. But we're going to go ahead and, also, let me share my screen there, Jaime. And then we're good to go.
You're good now, bro.
For sure. Thank you. Excuse me, guys. I'm going to go ahead and share my screen. There we go. Hell yeah, hell yeah, hell yeah. All right, guys, I don't know if the music's playing, but I'm going to just put it on right here so you guys can have some music also, too. All right. But what I'm going to go over, guys, beautiful entries, right, regarding, pretty much, they candle closes, and market structure with the present information that you have. And so they always got to consider the present information that you're getting, right? So I'm going to go over some specific example in Bitcoin and then a few in gold. That was beautiful, beautiful, beautiful sales. I don't know if literally at the very top. But we're going to start with Bitcoin right here. So what I like to do is always start right from the bigger time frame, and we're going to start with the daily. Oh no, where'd it go? All right, there we go. All right, so right now we're going to disregard what happened right here, but we're going to specifically talk about how we caught an 800 pip move, right, risking 100 pips. So even taking the trade, that's a 1-to-8 trade, right? And so how did we find that? Okay. So right here is where we actually caught the sniper entry, and then right here is where we caught another re-entry for the move to go up higher. Okay. But what do we consider? Okay. So first, we have this daily candlestick right here. Obviously, Bitcoin is moving up higher and whatnot. Now, people didn't know how to react to this, right, 30% drop and whatnot. But, okay, the masses are paying attention as Bitcoin is rising right here. Everyone's asking what's going on. So, obviously, there's going to be a big drop. When the news is paying attention to, right, certain things, same thing happened with gold when it reached 2,000, right? There was a big drop after it gave a little bit more, right, instant gratification for some buyers, okay? And a lot of people panicked, right? But the thing is, right now, it's like consolidating and going lower, as we can see. But again, we're looking at present information as it plays out. So what could we have identified right here when it dropped immensely below here, and how do we catch a beautiful entry right here, right? So we got to consider the daily, right, closes and everything, right? This is where we're going to break down break of structure. So you can see here, right, that we did technically break these lows, right? However, we didn't break the wicks, but what's more important is that you'll see and you'll identify is that this daily candlestick, as well as this daily candlestick, closed above where that last sell candle closed at. You see that? Even though the wick came below down and broke some liquidity, probably on a smaller time frame, on the 1 hour, the 4 hour, the 2 hour, 30 minutes, 15 minutes, probably some equal lows we can identify, right? And scared some buyers right here as well. And we're going to identify some support in the smaller time frame. And we'll explain. Okay. Price came all the way back up and closed above, indicating that price came into this daily candlestick order flow that also continued to break structure, right, on this resistance area. And on a smaller time frame, you identify resistance areas. Okay. We came back down. And we could have identified, okay, whether that Bitcoin wanted to break higher or we'll get a reaction, okay? And so how do we identify? And so what I like to do is identify what the situation might happen, right, on the bigger time frame, and then identify, okay, where are the possible price reactions? And so what I like to do is literally put a buy limit on the last area, and I watch price action play out on all the areas before. So how do we catch a beautiful entry at 37.20? And that's exactly where we got it at. We're gonna go on the 1 hour time frame. So what's going on in this area too as well? We're going to study all this area, this last down move that broke structure and continued higher, right? And I'll just reset everything too. But we're going to put that price level again, 37.20. First, this like beautiful wick that came down to take out all this liquidity, right? And then we have a tricky move going on right here. And this is why this candlestick was important. This candlestick area was the last move higher. And guys, this is something to add on your tips and tricks to help you know, to really find like, you know what? This is that last point. This is that area. We're going to go even on the smaller time frame to identify the imbalance, okay? And then we're going to show you how to get the mitigation, the re-entry, right? This even more safe, consideration to take an entry. But right here, a beautiful low risk trade. You could even go for below this low, right? Risking about 100 pips. You have to risk it 100 pips on this. It's about 10 points or, 100 points on Bitcoin on the brokers. If you use a 0.01, it's still 100 pips. It would be $10. I believe. I don't know, depending on your broker. But it's different on points. So we risked 100 pips on that, but the target was 800 pips. Okay? But if we go on the smaller time frame, 30-minute, what are we identifying? That imbalance. I don't know if Jaime and Jordan went too much into detail, but look at this beautiful imbalance. We went a little bit higher considering spread and everything, so that's why we went higher and everything. But look at this beautiful area right here at this last candlestick also. And we're not looking at this candlestick. We're not really paying attention to this one anymore because this one was the last one that came high, but it wasn't the last candlestick that broke structure. It gave us a move up, but it didn't break this area of resistance. It didn't close above it, right? So what area did close above it, right? This was the last candlestick, the last down move before the break of structure, and also considering that it went even higher. Okay. Now, this is to add onto your notes of swing entries and knowing, like, how can I catch that beautiful wick, right? And so on different brokers, where is that at? 37.20, right? It didn't come all the way down low, but let me show you guys what's important about imbalances and why sometimes you want to even enter off the 25% of an imbalance or 50% of an imbalance. What is an imbalance? Imbalance is unhealthy price action, right? The markets is all an algorithm, okay? And so what is basically, you see this right here? You see from this square area, this wick to this wick, right? And we're going to map it out. You can see, pretend there's a car coming through this way. You can see that because this wick is right here and this wick right here, this candlestick is open right here. That means within this 30-minute candlestick, there was buying only within this price and this price. That means it's unhealthy price action. So if the markets are an algorithm, right, just like a robot needs complete code, right? So what does that mean? It needs to complete its code. So it's going to come in here and fill some of this imbalance to continue its code moving up. Okay, so we're going to even just like, we could do 25%, 50%. I like doing about 25% of imbalances, considering this is the daily and everything. We'll just see a giant wick and everything. We're looking for a small price action move, right? But I wanted to go higher considering Bitcoin's high-ass spread, so we went like 37.20, okay? But again, we're just going to put this around right here in the imbalance fill area, and even from this imbalance area right here, right? And again, we're going to identify, and this is where our stop loss is. Now, where are we going to identify for targets too? Well, what happened before the down move and everything here? And why do we consider, it could have broken these highs considering the daily time frame. But right now, Bitcoin just made a big move up to us. We don't know what's going to happen. There's not enough information to consider that's going to go. So we're going to look for the next best available exit spot. And so where might that be? Right? Easily spotting out. I would consider here, but I wouldn't think we'd go any higher. So we're going to go about for 50% around this area or maybe even higher and look for imbalances around here. Coming around this area of support, right? Because if this is a break, then this might be a retest area, okay? So this might be a considerable target long term, but we're going to go and even identify in the smaller time frame what happened here, right? On how we went a little bit higher. And a little bit higher. Oh, even higher, guys. Yeah, actually 40K and everything. Right? But even for a first beautiful TP, that's already like what? Right, guys? And we're considering this as like swing trades and everything. So again, you're risking about 100 pips, almost 90 pips right here. Total for Bitcoin, and you're taking your regular, Forex trades. Right? And right there, first target for me would be breaking of this support resistance area, okay, because we want to, if this respected this area and we closed above, right, then we want to see a possible move higher and break above here. But first we're going to just go for the first target and see this break of structure. And what did we see? A beautiful break of structure, right? Boom. First target achieved. How can we identify a second entry? Same thing, guys. Oh, how do you delete with this one? There we go. I'll just delete the whole thing. How do we identify a beautiful re-entry to take out these highs? Same thing. This candlestick, boom, didn't break, right? But this one revisited, right? And what did it do? It broke structure right here. You see this? It closed above this area. You see how the candlesticks closed above here? So this, right, closed that area of resistance. So this was that last down candlestick move before the up move that broke structure and went even higher. So what did we do? We're on the 30 minutes still. Same thing. We're identifying imbalance, that unhealthy price action. You see, if I was a car, I could go through here, You see, if I was a car, I couldn't go through here because the wicks are blocking me right here. That's healthy price action. Price filled it in, filled it in. Unhealthy, but filled it in, filled it in, filled it in, filled it in. See that? Right here hasn't been filled in yet. Okay. What I like to do, 50% of imbalances, 25%. This one I would consider 50%. I'd like to come, around this area right here. Okay. And what are we going to look for? A continuation up move here and probably even higher. And this is actually, we called out another possible re-entry actually right here last week, or what was it? Yeah, about last week. And you guys can see, boom, perfect entry. Came down twice, right? This wick didn't come below this wick exactly, I think. Move stop loss to break even. Look to re-enter if it did hit your stop. I think this one we were safe. Different brokers also have different lows. So the low here was 32.42.7. 32.4. Okay, so this didn't actually break our stop loss at all. If you entered right here, or if you did enter higher, actually, so we did actually enter higher and whatnot. But we did keep our stop loss open considerably. But either way, if you get your stop loss hit at break even, you can look to re-enter, right? Seeing on the smaller time frame how the breakup structure goes on and find the mitigation to re-enter. Re-enter. Same concepts, guys. Break structures, re-enter on this imbalance. Last candlestick before the up move. Boom. But you guys then see from this last area that we identified, this imbalance area, and it even went lower pretty much to fill it in even more. So that's why you're looking to re-enter, because it's just filling in more code, and whatnot. Either way, if it does come lower, and then boom, continues going higher. And eventually we caught a nice 800 move. We called the TP at like 40K 200, but we told everyone to cancel it at 3,900 right there, 39,500 area. Because I didn't like what was going on right here. It did not break technically above this candlestick area, and then considering time and everything too, and that was already a nice TP. So like, if there's any questions, definitely ask. I don't know if there's any questions in the chat. I don't know, where does this pop up at? There we go. No, that's not it. We're going to go on some beautiful gold entries too. So again, right here, another 8-to-1 trade that you're finding. And guys, you're all considering this right on the daily time frame again. And so this is how you're finding those nice big movements, right, on the daily time frame, and then going into the smaller time frame to identify them. So now we're going to go over an example on gold. How do we identify a beautiful entry at the top, right? We got a nice entry at, I believe, 59.2. We'll just do it at 59. And so how do we get this beautiful, beautiful entry right here? Right? On ET's, actually, no, this trade I was in on my own. I did not send it out to my team. So sorry. But yeah, this was that sell limit. This is what I'm talking about. Literally, my last point of resistance, or like that last point entry, like basically like my last sell area, I always just put a sell limit, and I watch the other areas for price action and a breakup structure on the lower time frame on the 5-minute and whatnot. But here's to add on your tips and tricks and whatnot. So why did I consider even putting the sell limit here when price was going higher the next day? So we're on the daily candlesticks, and here's a beautiful tip to consider, right? To look for imbalances, equal highs on the smaller time frames and looking for those, trigger candles is what I like to call them, is where the banks are hiding their, their buy order flows and whatnot. And you're going to think of it as like a slingshot that's holding its position right before it releases the liquidity, it releases its volume, right? Taking out liquidity. Okay. And so this was literally one of the best entries I've caught. It was like literally like 2, 3, 4, 5 pip drawback. Put a 20 pip stop loss, I believe. Yeah, I didn't want to see it come any higher than 62, 25 pip stop. And honestly, my exit was just pretty much 600 pips, but that thing fucking tanked. And I still think it's going to continue to tank, considering that it broke this structure right here of support. It did close above higher here, technically. And guys, what I mean by this is a proper explanation, like, proper way of explaining like break of structure and candlestick closes, right? Because look at this. Right now, gold is bullish, and we're going to see what happens again to the current information. But we could still look and identify for sales around, possibly this area. I'm gonna say I'm liking this resistance area altogether, where people were trying to sell here, people were trying to sell here. So I'm liking this area, 1900 area. We'll see what's going to happen on a price action level and see what goes on even higher. But I don't know how. This is. I'm gonna turn this down a little bit because. Why we may consider that we may go higher, okay? And why did gold actually go, in fact, even higher? Is because this candlestick right here, is closed below this candlestick area. You see that? Even though price came down and took out liquidity and came lower, this is technically a higher low. Why? Is because price closed above where these candlesticks close, where this last sell move before the up move, right, to break this high, broke out. Okay? So another tip, same thing we identified right here. So why did I consider that even if price came all the way up here and might have went even higher, that we would have sold off right here in 1960? We're going to go on a smaller time frame, so because again, we're considering the daily time frame, the information it's telling us, and then we're going to go on the smaller time frame to like just dissect it and look for those trigger candles and where that last passable move might be where it sells off. Okay, so what did we identify right here when the candlestick closed for the day? Right, people could have said, you know what, yeah, we're selling off right here in this area. But what I've seen naturally is like during Japan session is that like gold naturally just booms most of the time during Japan session. So what I like to see is Japan session gold always like pretty much goes up for a little bit depending on the volume, and sometimes even higher, right? Depending on news is an excuse again, but I've seen some pretty big moves during Japan session for gold, probably some of the biggest moves for gold, in hours and all that, because of news and whatnot. But considering that, look, this is where price opened, right? So price opened Australia session, right here at 1942, and then price closed New York session 1950 and opened, right? The next session at Australian, right? But do you see right here what happened? And we're going to look at gold as a whole and why I believe still we're going to go lower. As we come up and come into that daily time frame. Look at this area right here. This last area of support. And it's also the last candlestick before the up move that took out liquidity. This took out the high, right? Or some of the highs too as well. But look what happened. It closed below. You see that? It closed below. So what is this indicating? It broke this support. It's breaking the structure of it going higher. And as you can see, it's just wedging lower, lower, lower. See this, the last low, up move, boom, created a low. So what did I identify right here? What happened here? And why was this candlestick so important? And why did we get such an amazing reaction off this last sell candlestick? And even right here, guys, you could have went for the daily, considering the risk right there, right? 1948, you would have been risking, you know, even from there to there, you know, about like 150, 130 pips. But still, you would have had a target of almost 2,000 pips, okay? And so even right there, just holding like, you know, positions like that with smaller lot sizes that fit your account, proper risk, you know, look at that. Beautiful entry right here. 131 pips, and even going for a first target, right, considering imbalance right here. Boom, that's an 8-to-1 trade, 1,000 pips. Even lower, coming to this lower candlestick, 1,300 pips. That's a 10-to-1 trade, right? But you can even identify in a smaller time frame. That's what we're going to do. All right. And it did, in fact, come lower as well. But how did we come up there and find a beautiful sniper entry? Okay. Same thing, guys. You see how this candlestick... And hold up. We're going to zoom in. You see how the structure, again, this was the last up move before the down move that broke structure and closed lower. So what did that mean? If price was to come in here, that would make it the daily lower, lower high if it comes into this candlestick area. And what happened? Again, we're looking at the present information that it's giving us, right? Throughout times of the day and everything. That's why you don't need to be like, you know, you have your trading windows and everything, but you don't need to be looking at the charts. You know, that's why you focus on, you know, a couple pairs. 1 pair, 2 pair, 3 pairs, because you're following its trail. You're following its algorithm trail. It's like it's all just an algorithm is what I think of it. And you just have to watch the daily, you know, flow of what's going on. Okay, so that's why, like, you know, and I have a couple pairs I look at too, but mostly I trade with like 1 to 3 pairs. You know, mostly gold, pretty much only gold, pretty much. But you can just check, you know, as price every other hour, you know, because especially with gold, forex pairs, they have their certain things during volume, but gold specifically, it does its own thing whenever it wants. So if you guys, like I said, news does crazy stuff during Japan session, even Aussie session, you know, London especially too as well, definitely New York. But like I said, Japan session, I've seen some of the craziest things happen during that session where people expect it to be, you know, the slowest market. But again, gold is different. It is a volatile pair. Just pay attention to Forex Factory and some other things too when news happens, and just also the trigger areas and everything. So that's why you just want to focus on a couple pairs to mark up the areas and look at what the story is telling you. But again, what confirmed everything is that look at this candlestick as we approach that area. Again, this is where the candlestick area closed, right? It opened. Price closed below. In this daily candlestick, New York session, we closed below, okay? So now we're confirming that, unless price action just takes us higher, depending where we're at during London session, you know, then we're going to go higher. But if price is just playing around and hanging around this area and slowly coming to some trigger candlestick area, we're going to sell off. Okay? And surely that's what we did. So how do we identify 62.5? but it's not the red line. It's going to be that bottom line. That's actual price, right? And so 1959, literally 4 pip, 5 pip drawback. We put a 25 pip stop loss. How do we identify this? So now we're going to go in the smaller time frame. So now we're indicating all the areas and everything. We're going to go in the 1 hour. We're going to start there. You know, we're going to go a lot of backtracking and everything. Hopefully it won't take too much time. Boom, 1 hour candlestick. What do we identify and whatnot? Okay, so we didn't really use the fibs on this and everything because, again, we're considering the daily candlestick area. Because as you can see, guys, again, we're just going to go back to the daily real quick. Oh, wrong way. Daily candlesticks will come into the wick areas. See, it will wick it into wick areas because what's going on in the smaller time frame is we're looking for triggered candles, and we'll go lower, right? Same thing happened, okay? So boom, take note. Focus on one pair, look for trigger areas, take price action trades or limit orders on your sleep for that like lowest or highest area, right? So we're going to go now in the 30-minute. I think that was the next area, right? I'm just showing you guys the process of like what's going on here and everything, right? That's where we entered at 1959, whatever, 0.2. Boom, what's going on right here? Unhealthy price action needs to be all filled in. And then we have that last up candlestick before the down move. And look where we put our limit at right there. 1959. And we put our stop. I don't want to see it come any higher over here. I went into the smaller time frame. If you guys go on the 5-minute, let's see if it allows us right now because time did pass and everything. Sometimes TradingView doesn't let you go too far. I don't know. I have the basic whatever, so I don't know if it does on like other packages and whatnot. I'm gonna check the chat in a second. Sorry guys, I'm just going into this detail. I hope you guys are taking notes and getting value from this. Drop some 111s in the chat, right? If you're getting some value, if you're still awake. It's only 9:47, but some places 10:47, whatnot. I know it's a Friday. Yeah, so I don't think price is going to let us go that far back because it's too much of information on the smaller time frame. So let's try the 15-minute. So we'll identify the as much imbalance as we can. Okay, if we did this earlier, you can go backtrack on smaller time frames, guys, and that's why you keep up to date with what's going on with current price action and mark your trigger areas and your areas before they disappear and whatnot. And see, we'll still go on even a smaller time frame. So the 15-minute allows us to go in. Nice. All right. Look at that. It literally came into, see, and you go on a smaller time frame, guys, and you can identify even more of imbalances. And so that's why I look right here. There's no more imbalance. Look, even right here, it got filled in, even to the T. Look at this, guys. The smallest of imbalances, price always returns. Price always returns. You know what I mean? And that when you're looking in the smaller time frames, you can't just do it anywhere. These are important notes to take when you're looking at swing trades, even taking intraday trades for big moves on certain days, that make you 500. Like this move, I think made like about 400 or 500 pips overnight, and then waking up to whatever session. So this filled in the imbalance. In a smaller time frame, we could still identify more. But look at what we have right here, literally to the T. You can identify even entering right here in 1957, right here, this little small imbalance, right? And this is important notes, again, for considering daily swing moves, right? Those beautiful pew-pew entries for daily and swings. And you can identify, look at this beautiful imbalance right here. And look, we even did, that's why we did 1959, 50%, about 50% of this imbalance. And I believe it went to like, what, 1959.4, right, guys? About like right there. And look at that, it pretty much filled it in. Let me do that. Oh. Too much. Sheesh. And then boom, as you guys could see, price beautifully wicks in and closes. And guys, what even confirms it even more, you can probably go in the 5 minute right here and look, it closes down below and everything. And look, you can go in it higher. Look at this candlestick close. You see this? It closed on the 15 minute. It closed below right here. I want to extend this backwards. How do I do that? There we go. This is where the candlestick closed, right? And you can identify the retrigger right here, that last move, and go lower, right? How do I identify, like, for sure we're going selling, right? And as you can see, it closed below that structure. We identified an entry at 1959, right? And all we're doing is for looking for wicks. So like, boom, you could have even risked 10 pips on this trade. Considering gold spread was like about 5 to 7 pips that day, probably put it up a little bit more. So I put it above this high right here, 1961, or even above higher for 25 pips. So I didn't think it was going to come into this wick area, but it didn't. But as you guys can see, here, I'm going to delete this. Oh, no. Either way, we'll define that one. Close below. Sheesh, we have to scroll a lot. So yeah, guys, we do have to scroll a lot. But again, look, we're identifying beautiful, beautiful sniper entries, right? This is what's important. You take your time on this for a little bit, you know what I mean? And all you have to do is pay attention to your chart, like maybe 30 minutes, 20 minutes a day, just marking it up a few bit, you know, just a little bit more, identifying what you see in the intraday trading as well too, you know, going for your 100 pip targets, you know, 10 to 1 trades, you know, risking 10 pips for 100 pips, 20 pips to 100 pips and whatnot. But again, mark up your beautiful areas for the daily entries and all that. And as you can see, it closed below on a 30 minute, closed below on the 1 hour, more than likely. And as you can see, it did. And then again, the biggest tip out of this, what I would say is, like, again, just a little key of mine that like really like gave me that little pop in my head, like, you know what, we're gonna sell at this last trigger candle for sure. And that's why I put that sell right there, that limit. Again, the last up move closed below. See how it closed below these candlesticks? Closed below it. Yeah, it went high, but closed below it. broke structure and closed below this daily support area, closed below, okay? So we may indicate that we may come lower, or that our price may want to come around this candlestick area to even possibly go higher, okay? But again, and then a beautiful, beautiful confirmation right here, right? That indicates that, yo, something might happen during London session. Because what I've also noticed, guys, is with gold is London is a session where gold usually sells off, you know, around 2 a.m. to 3 a.m. Even sometimes triggering before pre-London session and German session. Drop some 111s in the chat if you've noticed that, if you follow gold, right? If you follow gold, you will notice that during Japan session, gold will go up, and during a London session, gold will go down, right? And sometimes seasonality has to do with it too, but that's what I tend to notice, right, from my experience with gold. And that's why I like focusing on gold a lot, because for me, I know it so well. That's my most profitable pair. And again, we got a beautiful snipe entry, right? First target, going for these lows, long-term trade, you know, boom, target acquired. Second target, these lows, right? I wouldn't hold it any longer, because again, now we're reacting even higher. We got a beautiful setup right here that happened. I'm pretty sure Jordan just went over it. But yeah, FCMO, you can't hold it over the weekend, but if you did catch it, you caught a nice, you know, if you bought it at 1940, risking about 25 pips, right? Oh, actually, yeah, let's just go over that. And now we'll just go over, like, you know, a smaller time frame analysis on what we found on gold and how you can get in and out. Oh, is that where we're at? 1801. Oh, okay. This is where we're at. Same concepts, guys. And look, in the 5 minute. Oh yeah, Jordan did actually go over this, but now we're considering like why an extra confirmation again with the candlestick closes. Look at the 5 minute, the 1 hour, everything else. We'll go on a smaller time frame to identify, because yeah, we identify imbalance and everything right here. And the last trigger candlestick, right? That last sell candlestick, we'll just mark the wick if you're going to take an entry right here. Right? And as you can see, this candlestick area, and if you guys look at the dashed lines right here, boom, it did not close below. It went lower and took out liquidity. And this is what's awesome, guys. This is what manipulation is. It takes out liquidity. They're like, oh, it's going to go lower, but look at market structure. On the 5 minute, it closed higher than these candlesticks. What do I mean? Look at the body of the candlestick. Look at the body of it. That's where it closed. Okay? Look what happened. It went below it, but look where price closed. On that 5 minute candlestick, it opened and closed above that structure. That's what manipulation is sometimes, right? Oh, it's going to go lower. Boom. No, all it did was fill in imbalance, took out liquidity, closed higher, confirming that this area, we're going to see either a reaction or we're going to see it go higher, right? And what happened? Price came. Look at that beautiful wick entry. Oh my God, beautiful. On buys, you do have to consider spread though. Sells, you don't. Okay, but even right there, we were a little bit off. But even considering the whole candlestick and everything, interesting imbalance, what you want to do again is just go for the imbalance if you're considering a smaller time frame. So again, let's just quickly identify the imbalance. Again, what is imbalance? Unhealthy price action. Okay, on the 5 minute, you can't see any imbalance right now, right? But you can just identify the imbalance right here. Take it at 1939, right? your risk would not go, I would say, any lower below this wick. So you could risk 50 pips. I risked about, I think I took a mitigation reentry, but I would have not risked below any here. So that would have been about 40 pips. You guys would have been risking 45 pips, 43 pips, right? But what I identified and what I considered a very small risk trade was this area of resistance. Look what happened. This candlestick closed above. We did get a reaction right here, but considering that we wanted to get a higher time frame reaction, because look what happened with time, 7:30 a.m. And what happened right here? Boom, 8:35 a.m. If you guys didn't know, 8:35 a.m. Central Standard Time and 9:30 a.m. Eastern Standard Time is when the New York stock opens, right? And that's hence where more volume is entered into the market. So boom. Why was this a beautiful entry? And I consider this break of structure when it's revisiting this last candlestick area for a low risk trade. Boom, guys, even entering right here and putting your stop loss. This is actually where I took my entry. Below right there. Literally, okay, 1939.2. Now you're risking about 20 pips compared to 40. Okay. And you would go for the last area of resistance. Naturally, you want to go for more than a 3-to-1 trade. And this is how you could have got a beautiful entry on gold again. I believe, yeah, I think gold, yeah, Jordan actually did go over this, actually, didn't he? Yeah, he did. My bad, Jordan. But yeah, again, exit points, guys, you want to look for something that's 5-to-1, 3-to-1, you know what I mean? Something that's working for you and everything. I naturally now like to go for 4-to-1, 5-to-1. That's been working out for me now with price action and re-entries and everything, and the slow, smaller stop losses. But you guys kind of find a beautiful entry right here. Beautiful entry. But again, what's giving us the bigger confirmations is, again, the candlestick closures. Look, even again, what gave us the biggest confirmation? Look, the 15-minute, it closed above where it closed here. See how the body closed below? This body closed above. Right. Let's go on the 1 hour. We'll just skip on the 1 hour. You know what I mean? If you go through all the time frames, the more confirmations on all the time frames, the better. Same thing. Look at that. Came lower, but closed. And look at this candlestick. Barely closed. Barely. So we're indicating right now that we may see some bullishness. Look, we barely closed above. So this is indicating for maybe a possible higher, right, higher low. And why we may actually consider the break even higher, right? And then ultimately, same thing on the daily time frame. Beautiful. Same kind of thing, guys, as you guys could see. I do believe, I don't think this is like, we may continue higher from here, but I still think we're going to continue selling from here because we're just playing in the zone now. We're consolidating in the zone to see a breakout move, either go higher or lower. And I still believe we're going to go lower and break this low. But right now, for now, we filled in imbalance. We got a reaction. We closed higher, right? Although we closed below this structure. So again, that's why we may revisit this structure to see a sell-off. But for now, we closed above this structure. We filled in balance. So we're indicating now we're going to see some temporary bullishness until we see what happens here. Present information. Pay attention to the present information as you're constantly trading, right? And that's why I like to follow one pair, because you're just finding beautiful moves every day, whether it's intraday, swing trades, intraday swing trades, whatever the case may be, guys, right? And so what happened? Look at this, guys. Same thing. Last area of resistance, last down move, price broke above, came lower, filled in balance, and then we identified that smaller time frame objective. So ultimately, I want to see gold fill in some code around this area. And it'd be beautiful to see because, boom, left shoulder, head, neckline, break of structure, right shoulder. See a nice fat wick around this area. If it comes any higher, I don't like it, but we'll see what happens. All right, but that's all I got. I hope you guys got some value.
All right, Hassan, I appreciate you, bro. That was a fire training. Hopefully everyone got what they were looking for tonight. The recording will be shared on YouTube, on Telegram. For those of you that watch it all the way to the end, Hassan's Instagram is Hassan the Proton.
Yes, sir.
Jaime's is, I believe, oh my gosh, someone could drop it. Is it Stand Profit? It's Stand Profit with J, is it? Is it Stand Profit with J? And then mine's Infinite Abundance 777. Hope you guys have a great rest of your night, man. Enjoy your weekend.